This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, April 2nd, 2015. Euro dollar. So the euro is trying to figure out right now if it wants to establish a lower top ahead of a fresh downside extension and bearish continuation below the recent 12-year low at 104.62, or if it's still in the throes of a correction, is looking to put in a higher low somewhere around 107 in favor of the next upside extension for a continuation of this correction beyond 110.52 and towards the 111 to 112 area. At this point, it's too difficult to call, and looking at the resistance points from Monday, from Tuesday's high lows would be the best indication for today's session. Tuesday's high comes in at 108.45, so that's going to be key resistance above for the day, while Tuesday's low comes in at 107.13. So 108.45 and 107.13 are the key levels to watch in Thursday trade. Sterling dollar. So cable has done a good job of consolidating and keep staying supported off recent multi-year lows at 46.35, and the market could very well be poised for additional corrective upside over the coming sessions. At this point, though, the downtrend remains firmly intact, and only back above 51.65 would really take the immediate pressure off the downside. Dollar yen. So dollar yen hasn't really done much over the past several sessions. The market broke down since topping out at 122.03 towards 118.23. That was some key support going back to the 17th of February, but stalled just shy and is now traded back into the mid-range. At this point, even though the overall trend remains highly constructive and favors an eventual break above 122.03, we could see additional consolidation or maybe even some more downside pressure before the market finally decides to trade higher. Key resistance on a short-term basis comes in by the high from the 31st at 120.36, while key support is that 118.23 low, going back to that 17th of February low. Euro Swiss. So a bit of an interesting development in Euro Swiss into Thursday, with the market taking out some key support at 104.15 to trade down below 104. This break could suggest that the market is poised for additional setbacks over the coming sessions down towards the parity level. The recovery outlook since that dramatic, violent decline, that historic decline several weeks back or back in January, is still suggesting that the market since then is recovering, and so the recovery outlook is still intact, but the market, it could be poised over the coming sessions for deeper setbacks before we find a higher low and a recovery back eventually above 108.15. A close below parity, if we do see that, would put the immediate pressure back on the downside. But even though we've seen a break below 104, and even though it suggests that we could still have a little bit lower over the coming sessions, there is still risk for a higher low as the recovery outlook remains intact off that historic decline from January. Aussie dollar. So Aussie remains under pressure, though the market has been consolidating in recent trade, going back to going back to January. We did see a breakdown to fresh multi-year lows at 75.60, and the market is threatening a break of that 75.60 low. But in the interim, the market could still be poised for consolidation above 75.60 over the coming sessions. Ultimately, though, the downtrend does remain firmly intact, and any rallies are expected to be very well capped on a short-term basis in favor of an eventual clear break below 75.60 towards the next major psychological barrier at 70 further down. Really, only back above 79.38, the high that we saw back on the 24th of March, would compromise the bearish outlook. Dollar CAD. So dollar CAD has been very comfortable trading in a range over the past several weeks, with the market defined between 23.50 below and 128 above. That's roughly defined. We did see a break to a fresh 5-year high above 128.35, but the market couldn't close above 128, and so it continues to be confined to this range trade. There is risk over the coming sessions that we do see additional pullbacks into the 124 area, but really only back below 123.50 would compromise the immediate bullish outlook for dollar CAD, which sees an eventual break above 128.35 towards the 2009 peak at 130.65 further up. Kiwi dollar. So Kiwi remains locked within an intense downtrend, though the market has deferred to a period of choppy consolidation over the past several weeks. The market recently stalled out just shy of 77 and is favored to eventually trade down below that recent 71.76 multi-month low and towards the 65 barrier over the medium term. But at this point, we would need to see a break below 71.76 to confirm and accelerate declines, while inability to do so will keep this choppy trade intact. Ultimately, though, a break back above 78.90 would be required to take the immediate pressure off the downside. So just continue to expect choppy trade in Kiwi and wait for a break below that 71.76 low. SPX 500. So the S&P 500 is showing promise for some form of a major top after the market was unable on recent attempts going into mid to late March to retake or break above that February record high at 2120. The market has since broken down and put in a lower top around the 2090 area and is pressuring some critical support at 2040. A break and close below 2040 would do a good job of solidifying or strengthening the toppish outlook and accelerate declines over the coming sessions back towards and eventually below 2000. So this is going to be an important level to watch, and if we do see a break below 2040, look out below. Gold. So gold is showing promise also with the formation of a major base after the market had stalled out back on the 17th of March ahead of that critical 2014 base at 1131. At this point, the market could be putting in a higher low this week after trading down to 1178 and then bouncing back above 1200, but we need to see a break back above 1223, the high that we had seen back on the 2nd of March, to really confirm this basing outlook and open the door for significant upside in the sessions ahead back above 1300. If we do see a break above 1223, it would definitely encourage the longer term prospect of a major base that is formed at 1131. That's all for now.